Hey everyone, this is Charles Msasizi. Uh, in this session, we shall learn how to use the accounting equation, or we shall understand what the accounting equation is. We are in a series of QuickBooks tutorials, and we shall go in a tutorial of passing a journal entry. But passing journal entries requires you to know the accounting equation, or what we normally call the double entry system of accounting. It will be easier for you to pass journal entries. Once you don't have this, it will be hard for you to pass journal entries. The backbone of financial accounting is the accounting equation. It teaches you how to debit and how to credit. And if you're an accountant and you don't know what to credit and what to debit, you're still lacking in accounting. You need to understand the backbone of financial accounting. So, this is the double entry system or the accounting equation. So, it begins by this equation: assets is equal to liabilities plus capital. But then we shall expand it a bit. We are now deriving it from first principle. So, but what is capital? We are going to expand capital a bit. But capital is equal to equity plus profits minus drawings. Someone may ask, what is equity? This is the capital that the owner invests in the business. It can be share capital, it can be cash contribution towards the business. This can be buildings, motor vehicle that the owner has put in the business to work as capital to run the business. Then capital is equal to equity plus profit. What are profits? Simply, these are when you make income in your business and you less all your expenses, you get what we call profits. It also makes up your capital. It becomes part of your capital because it increases the capital. In businesses, we normally call it retained earnings. Unless when you pick it out of for the business to use, it no longer remains there as capital. But once you leave the profits in the business, they remained as retained earnings and it form part of the capital. Then we also less drawings. Yes, drawings, this is when the owner of the business goes and picks capital out of the business for personal use. You know, capital can be in the form of stock, cash, assets. So when you pick money out of the business for your personal use, then it's called drawings. These are drawings. So capital is equal to equity plus profits minus drawings. So we come and apply, we replace this with capital in our equation. And we replace it with capital. So our equation shall be assets is equal to liabilities plus equity plus profits minus drawings. But do you know that profits also are equal to income minus expense? Profits, you get the income of a period, you less your expenses, then that residual value, that remaining remains the what? The profits. So we also pick this and we replace profits with this in our equation. So we shall come up with assets is equal to liabilities plus equity plus incomes minus expenses minus drawings. So those who did mathematics, we know once you find such an equation, you collect like terms. When you collect like terms, you pick these ones which have negatives, you bring them on this side. So when you collect like terms, we shall have something like this: assets plus expenses plus drawings is equal to liabilities plus equity plus incomes. So this becomes the accounting equation. This is the accounting equation. So it is up to you to understand whatever in this accounting equation. It's the same as this one down, same as this. Whatever thing is on this side, the left hand side, is debited. Left hand side is called debit side, then right hand side is called the credit side. So whenever anything here, any item here on the debit side increases, we debit it. Okay? So, but whenever an item on the debit side reduces, we credit it. And also on the other hand, whenever items on the credit side increase, we credit them. Whenever they reduce, we debit them. Now it's up to you to understand what do we call assets, what are expenses, what are drawings. So whenever you see an asset increasing, you debit. If it reduces, you credit. Let me give you an example. Uh, Cash is an asset. Motor vehicle is an asset. So what if we go and pick our cash in the bank and we go to buy a business motor vehicle? What should be our debit and our credit? Since motor vehicle is increasing in our business, we debit motor vehicle. Maybe we bought it for as 90 million. So we debit motor vehicle with 90 million. Why? Motor vehicles have increased in our business. These assets in form of motor vehicle have increased. But at the same time, cash reduced because we picked the cash in the bank and we used it to buy the motor vehicles. So as motor vehicles were increasing, cash was reducing. So we credit cash at bank with 90 million. So 90 million in the bank are reduced. So they went to buy the motor vehicle. So you can see this is the double entry. This is how we do the accounting equation. So what if we bought this motor vehicle by loan? If it was purely a loan, it means the motor vehicle is increasing in our business. A loan is a liability. And the liability is also increasing. And we said things of this side are credited whenever they increase. That means we are going to debit motor vehicle. Maybe it was worth 100 million. So now we have a liability or a loan, a banker loan. So we are crediting banker loan. Because in our business now, loans have increased in form of a borrowing. So we got a banker loan and we got a motor vehicle. So we debit motor vehicle since an asset has increased, and we credit banker loan since a liability has also increased. Liabilities are credited when they are increasing. So it has increased, we have credited. Okay, let me take you. Let me also give an example on expense. Whenever you make expenses, cash is reducing and expenses are increasing. So what do? You debit the expense. That expense may be for a particular item, maybe transport expense. Transport expense. But we use the cash to make that expense, and our cash has reduced. So we credit cash. Assets are credited whenever they reduce. So are you seeing how the double entry works? What if I've made an expense but on credit? This time round I have spent, but they are demanding me. It means the expense has increased, debit expense. And the credit accounts payable. Accounts payable is a liability. Liabilities have increased, and whenever they increase, we credit them. So once you understand the accounting equation, you know which side to debit and credit whenever it increases or reduces, and which side to credit and debit whenever it increases or reduces. Once you identify what lies in assets, expense, and drawings, you will know how to debit and credit. And if you know what lies among liabilities, equity, and income, you know what to debit and credit. For example, if a shareholder brings in money into the business, that's now equity. As capital is adding capital into the business, a contribution of capital. It means cash has increased. So we debit cash. A shareholder has brought cash. And we credit what? Let me keep it on the same line. And we credit what? We credit equity. We credit equity or capital. That means cash has increased in our business, but at the same time, our capital has also increased. Because whenever capital increases, we credit it. It's on the side of the credit side. of the accounting equation. So let me go and give a real example in our accounting system, QuickBooks. We want to pass a journal entry. Supposing we have gotten a loan from the bank and we want to pass a journal entry in QuickBooks. When we get a loan from the bank, our cash at the bank increases. The bank deposits money on our account. So our cash in the bank increases, but our liability in terms of loan has also increased. So we are being demanded. So you go on company here and click on general journal. Make general journal entries. Okay, the date when the bank gave us the loan was perhaps 1st January 2026. And that money came into our bank account, Stanbic Bank. How much was it? 50 million. So we are debiting. You see this journal entry table. It has the account here, it has a debit here. So whatever item is debited, whatever account is debited here, you put the amount under debit. If it's supposed to be credited, you put under credit. So when we get a loan and our cash at the bank is increasing, we debit bank. So Stanbic Bank is debited by 50 million. That 50 million, it's supposed to be 50 million. And I will call it banker loan. Bank loan. Then I come on the next line and I put loan. It's a short-term loan. As long as that loan is supposed to be cleared within a period of 1 year, not more than 1 year. It is a short-term loan. Long-term loans, these are loans that are supposed to be cleared. They are due in more than a year. Okay, so when I chose short-term loan, automatically the system has credited it. You see under this column of credit, it has credited it and it has narrated here as the banker loan. So once I save this, I'll go and check in my account balances. Company snapshot shows you account balances. So you see, my Stanbic Bank account has 78 million. Previously, it had some money, 28 something million. But since we got a loan, it has increased to 78 million. And they are showing us that we have a short-term loan of 50 million. So you can see liability has increased by 50 million and our cash has increased. That's how we debit and credit. So if you have any question about the accounting equation, please send your question. You can type a comment in the comment section on our channel, or you can send me an email on berakconsultantservices@gmail.com and you'll be able to get your answer. Okay. So why I wanted to bring you this accounting equation session is because we are going into another session of how to pass journal entries in QuickBooks, and I wanted you to be equipped by the accounting equation, because you can't pass journal entries minus understanding the double entry, the debit and credit stuff. Thank you. I remain Charles Musasizi, tax and accounts consultant, Beraka Accounting Services, Kampala. Thank you.